Imagine walking into a casino, but instead of slot machines, you see stock charts flashing red and green. Exciting, right? That's exactly how many beginners feel when they first step into the stock market. But here's the catch: most of them lose money, not because the market is unfair, but because they make the same mistakes again and again. Today, let's uncover the top 5 mistakes new investors make in the stock market, so you don't repeat them. Let me tell you a story. In 2021, millions of new investors rushed to buy GameStop and AMC stocks, not because they understood the companies, but because everyone else was buying. Social media was full of hype, people bragging about overnight millions. But when the bubble burst, many latecomers lost everything. This is called herd mentality. The psychology behind it is simple: humans feel safer in groups. If everyone is buying, it must be right. But in the stock market, the crowd is often wrong. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful."
Another common mistake is treating the stock market like a lottery ticket. New investors dream of doubling their money overnight. They jump into hot tips, penny stocks, or unknown companies without research. Think of it like planting a seed today and expecting a tree tomorrow. It doesn't work that way. Studies show that over 90% of day traders lose money in the long run. Real wealth in the stock market comes from patience, consistency, and time, not chasing shortcuts. Here's a classic beginner trap: buying a stock just because a friend, YouTuber, or news headline says so. Imagine buying shares of a company you've never heard of, without knowing what they sell, how they make money, or their financial health. That's like marrying someone after one coffee date. In investing, research is your best defense. Read company reports, check earnings, and understand their business model. Remember, buying a stock means buying part of a business, not just a symbol on a screen. Picture this: you invest $1,000. The stock falls 10% in one day. Panic kicks in, you sell, and the next week the stock jumps 20%. You just lost money because of fear. On the flip side, greed can be just as dangerous: holding onto a stock far too long, hoping it will keep climbing forever. Psychologists say money triggers the same part of our brain as survival instincts. That's why the two biggest enemies of investors are fear and greed. Smart investors build strategies that keep emotions under control.
Finally, the deadliest mistake: entering the market without a plan. Most beginners never ask themselves, how much can I afford to lose? What's my long-term goal? Do I want quick income or slow growth? Without answers, every market dip feels like a disaster. Professionals always use risk management. They diversify, set stop-loss orders, and invest only what they can afford to lose. Think of it like wearing a seatbelt. You hope you won't need it, but you'll be glad it's there in a crash. So, let's recap. The 5 biggest mistakes are: following the herd, chasing quick profits, ignoring research, letting emotions control decisions, and investing without a plan. If you avoid these traps, you're already ahead of most beginners. The stock market is not a casino. It's a tool to build wealth, if you respect the rules of the game. Remember, patience, discipline, and knowledge are your greatest investments. If you found this helpful, hit the like button, share this with someone starting their investing journey, and subscribe to Book 2 Brain News for more stories and lessons on money, society,